Welcome to this video on navigating 401k overcontributions. We'll guide you through understanding contribution limits, steps to take if you overcontribute, the tax implications, how to file an amended tax return, and best practices. Here's what we'll cover in today's video. Understanding 401k contribution limits, what to do if you overcontribute, the tax implications of overcontributions, filing your amended tax return, key considerations and best practices, and finally, additional resources. Let's start with understanding the 401k contribution limits. First, annual contribution limits are critical to 401k retirement plans. For the year 2024, the maximum contribution limit for individuals below the age of 50 is $23,000. Crossing this limit can lead to tax penalties and various complications. Now let's explore what happens if you overcontribute. If you find that you have overcontributed to your 401k, the first step is to immediately contact your plan provider. They will typically assist in the return of the excess contributions. While some employers might issue amended W-2 forms, this isn't a standard practice for everyone. It's crucial that you document the returned amount thoroughly. Next, we will cover the tax-related aspects of overcontributions. Let's test your understanding. What should you do immediately if you find you've overcontributed to your 401k? Is it A, wait for year-end to see if it resolves itself? B, ignore it and contribute more next year? C, contact your plan provider immediately? Or D, withdraw the total contributions back? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to contact your plan provider immediately. It's important to resolve the overcontribution as soon as possible to avoid further complications. Let's look into the tax implications. Even after the return of excess contributions, you'll need to make adjustments to your tax return. The returned pre-tax contribution should be reported as earned income. Any earnings associated with that contribution are taxed in the subsequent year. This ensures accurate reporting of your income and helps avoid potential tax penalties. Now, moving on to how to amend your tax return. When it comes to filing your amended tax return, you can use tax preparation software like TurboTax. The exact lines will depend on both the software and the tax year. What's important is accurately reporting the returned contribution as income for the correct tax year, and ensuring any earnings are reported on the subsequent year's return. Don't hesitate to consult the software's help section or a tax professional if you need further guidance. Moving on to some key considerations and best practices. To wrap up this section, here are some key considerations and best practices. Keep thorough records of all contributions, withdrawals, and correspondence with your plan provider. Consider setting up automatic contributions to avoid future overcontributions. Consult with a financial advisor or tax professional for personalized guidance, especially in complex situations. Lastly, let's see where to find additional resources. For additional resources, you can visit the IRS website to get more information on 401k plans and tax regulations. Additionally, explore reputable financial planning resources, which provide further guidance for managing your 401k effectively. Thank you for watching this video on navigating 401k overcontributions. Remember to like, share, and subscribe for more insightful content. We would love to hear your thoughts, so feel free to share your comments below.